So if you want to improve your credit score, this is the video for you. I'm going to take you through 14 different things you can do, simple things that will help boost your report and in turn see your score improve as well. Really, really vital stuff if you want to make sure you've got access to the best deals on things like mortgages and credit cards, or even just a chance of getting that new current account, that new mobile phone contract. Your credit score, which in itself is a sign of how healthy your credit report is, and that's the most important thing. This is really, really vital stuff. So let's start off, let's get straight into it. Number one, this is Credit Score Building 101, register to vote. This is key and a very, very simple thing for you to do. As long as you are eligible to vote, do it. It's worth doing it anyway, just so you can actually vote in the democratic process here in the UK. But if you do that, that basically gives a really nice kick to your credit report because it shows that you are who you say you are and that you live at the address you say you live at. Okay, really, really, really important to do this. Now, if you aren't eligible to vote here in the UK, maybe you're not a UK citizen for whatever reason. Maybe you are a UK citizen, but you don't live here and you haven't lived here for a while, so you can't vote as a result. Then you can ask to have that information added to your account. So they might ask for proof of address and things like that, but you can make that request and get that added. And you have to do that on each of the 3 different credit reference agencies. More about that in a second. The next one is to pay your bills on time. Really, really, really simple, this one. If you have a deadline to make a payment for whatever it might be, make sure you hit it. Because again, that demonstrates to anyone who checks your credit report, anyone who might want to lend you money, that you're able to make timely repayments. If they were going to lend to you, you would hopefully do the same thing again. Now, the simple way to do this is to set up direct debits for those bills. And that means that the money will come out of your account every single month. You can't forget to do that. And we've all had it in the past. Oh no, didn't pay the credit card or whatever. Soon as you've put it on a direct debit, that isn't your problem. You obviously have to make sure that there is enough money in your current account to pay those bills. But one simple trick here, really easy one, is if you can, and most companies will let you do this, change your direct debit date where the bill comes out of your account to just after payday. Give it maybe 2 or 3 days after payday to allow for things like bank holidays and weekends. But then that money will go out of your account when you absolutely 100% have the money there available to pay them. So that's a really, really important one to do. And on that same thing, number 3 is to make sure when you are paying those bills, you pay the full amount. Now, credit cards in particular, you can, if you want to, just make the minimum repayment. I mean, obviously you can pay less than that, but that's really bad and that's a default. So make sure you're paying at least the minimum on your credit cards, but ideally pay the full amount. Because again, this demonstrates to prospective lenders that you aren't struggling. You actually have enough money to pay this off every single month completely, not just a little bit here, a little bit there. So that's another ideal one to do. Next one after this, and this is more about the details actually on your credit report itself. And I'll split this into 4 and 5, similar ones, but I'll split them into 2 separate ones. The first one here is to be consistent in your applications. So when you're putting the details in, your address, your phone number, all that kind of information, make sure that it is the same every time you do it. Even your name, maybe you've got like, I'm Andy, but I'm also an Andrew, you know? So having that consistency in your application is really, really, really important because again, it shows that you are the same person. It might be that that little change somehow doesn't trigger and they think there's something wrong going on here, particularly when it comes to addresses. Old addresses aren't great. And that brings me on to number 5. And this is to check your credit reports. As I mentioned, there are 3 of these. It costs you nothing to check all 3 of them. I've got a whole video taking you through how to do that. So make sure you do watch that one. I'll link to it below so you can watch it after this. Check all 3 of those. First of all, look at things like any inconsistencies. Look to see if you've got an old account at an old address. One you might have forgotten about, but it's still open, you don't use it. Go to the providers, the credit card company, the mobile phone company, whoever it might be, get those addresses updated. That's all going to help. Again, building that consistency. But while you're checking it, look for anything else that doesn't seem right. Any errors, any kind of mistakes. It could be that someone, and this is the worst case scenario, but someone maybe they've taken out some credit in your name and you're not even aware of it. And that's not going to help you at all. There's a credit card or a mobile phone or whatever it might be racking up debt in your name. So have a look for anything there that isn't right. And just generally, just make sure everything is all okay. You can quite easily make some of those changes directly with those providers. Like I said, anything a bit more dodgy, then get in touch and investigate it. And you might have to go for some fraud stuff if that is the case. But again, nice and easy one to hopefully sort out, or at least know you're doing the right thing. Now, while you're in there as well, you might notice that you are linked to some people. It could be your husband or wife or your partner. It could be a parent or a sibling or something. Or it could be a flatmate. Basically, anyone where you might have taken out a joint current account or a joint loan, maybe one or two other sort of joint products, but not too many of them. If you've taken it out with them, you are therefore financially linked. You're both equally liable for what's in there. But that also means that that other person's debts or their own sort of credit score could be impacting you. So just make sure, see if anything on there, look at the linked accounts, make sure that's correct, that they shouldn't be sort of already wiped out. And if they are old ones, you've broken up with that person, you're no longer in that house share, make sure you offer something called a notice of disassociation. There are simple ways to do this with each of the 3 credit reference agencies. Remember, you have to do that with each of them. But get that sorted, and that will hopefully break that link, break that chain. And if they have got a bad credit report, then your score will improve as a result. Or if it's fine, it is an account you're still operating, you're still sharing that account with that person, just keep an eye on it. Just make sure that suddenly if something does go wrong and you can't track it down to anything else in your credit report, that might be part of it, and make sure there isn't something going on causing you a problem there. Now, number 7 comes down to the length of time you're with a different provider that's registered on your credit report. So how long you've been with a current account, for example, how long you've had a credit card, for example. These things, the longer you've been with a single provider, the more that shows some sort of resilience, some kind of stability. You know, you aren't jumping ship all the time. You are able to have a long-standing relationship, and that again will help increase your score. So look at them, look at those longer ones. And if there are some accounts which you've had around for a decent amount of time, then maybe you want to keep hold of them. You don't necessarily want to be switching those away. You know, I'm always talking here on the channel about the best bank switching offers and getting some cash here and doing this, that, the other. I'm talking about maybe changing your credit card so you're getting cash back or whatever it might be, getting the best possible deal. That's all great. That's all well and good, but not necessarily worth it if you're trying to build your credit score, because if you ditch the long-standing ones for something new, and if you can always do that, you're constantly cycling through these, you're never going to see that benefit on your credit score and on your credit report. A little bit of a sideline here. What I'd obviously do here, if you want to change your bank, is just have an extra account that you often switch. So that's the one that you are changing on an annual basis, but you've still got that old one that sticks around. Even if you aren't using it, you've had it for 5, 6, 7, 8 years, whatever it might be, that one stays put. So that's really, really vital to make sure you are doing this. I've got a whole video that can take you through the impact of switching bank on your credit report, of opening new current accounts on your credit report. So again, I will link to that below and link to it here so you can watch that one if you want to. Now, number 8, I mentioned just now about, it's not always a good idea to close those long-standing current accounts and credit cards. But credit cards is slightly different, and there's no hard and fast rule here. Sometimes the longevity rule is the best one. You keep it even if you're not using it because, as I mentioned before, it shows that kind of long-term relationship. But on the flip side, if you've got too much credit available to you because you've got a credit card sitting there you're not using with, a credit limit of £1,000, £2,000, maybe even more, when you then apply for future credit, well, the lender might think they've already got access to too much credit. I don't want to give them any more. And that in turn, that kind of sentiment, that kind of feeling can mean if you've got too much credit because you've got a credit card open that you're not using, that could reduce your score. So on that logic, then cancelling old credit cards is the right thing to do. Again, no hard and fast rule here. One rule, cancelling for one person could be good, cancelling it for another person could be bad. Really, you've got to take a look at the other sort of pros and cons of having an open credit card available to you. Cons could be that temptation to spend. You don't want to do that. If you want to completely get rid of it, close it down completely and you don't have to worry about that. But the next point it brings me on to is probably the way you're going to work out whether you should cancel that card or not. Again, it's not a definite, but it might help you. Now, this is down to actually something called credit utilisation. This is my next top tip for boosting your credit score. Credit utilisation essentially is a number, and it's the percentage of your available credit limit on your credit cards that you're using. So let's say, for example, you've got 2 credit cards. Each of them have £500 as a credit limit. They're small credit cards. £500 gives you a total credit limit of £1,000. Now, let's say on credit card 1, you've got £100 that you spent on it. Credit card 2, you've got £400 you got spent on it. That gives you a combined credit utilisation limit of 50%. Okay, that's combined. But you've also got a second credit utilisation rate. Well, in fact, you've got 2 more because you've also got the rate on the individual cards. So remember, card 1, that's got £100 out of £500. So that's a 20% credit utilisation rate. The other card, £400 out of 500 quid limit, that's an 80% credit utilisation rate. So it's important to bear in mind you've got the individual ones per card and you've got an overall one. Now, the recommendation from the various credit reference agencies is that you try and keep that limit below 30%. 25% even better, 20% even better than that. And that's where you kind of want to keep it. Now, that first card we mentioned at 20%, that's great. That's got a really good credit utilization rate. But the other card and the combined credit utilization, they're obviously well above that rate. And that isn't good for your credit score. So you want to here be focusing on trying to keep that rate low. Now, the more important one seems to be the overall limit. So if you do have one card that's used a lot more than the other, but overall your credit utilization rate is down that sort of 25-30% rate, then that's going to be sort of reflected well in your credit score. But I still would try to avoid having one card almost maxed out. Try and keep it still down. It doesn't have to be down to that 30%, but even 50 or 60% is much better than going to 80, 90, 95% on that one card, even if it's kind of leveled out by all your different credit cards that you've got available to you. So that's really, really important one to think about there. And again, remember, talking about that point before, do you cancel a credit card to boost your credit report score? Well, if it doesn't have too much of a massive impact on your credit utilization, if you've got a massive amount of credit available to you and your spending is relatively low, then cancelling it probably shouldn't be too much of an issue unless, as we mentioned before, it's a really, really old card that you've got. Now, if you are worried about the credit utilization on individual cards or across the piece, there are a couple of things you could do to kind of work around that. You could pay off the card or part of the card, not the whole thing, pay off part of the card earlier in the month just to bring that back down to sort of that lower limit around that 30% mark. Or you could ask for a higher credit limit. Remember, you don't have to use it just because you've got it. And in fact, you shouldn't use it just because you've got it. But if you are able to boost it, let's say both those cards suddenly get boosted from £500 to £1,000 in my example, where your overall credit utilization rate drops from 50% to 25%. And all you've done is increased the credit limit on them. You're still spending as normal and your score should improve as a result. Now, my next tip is to avoid too many hard searches on your credit report. A hard search is basically one that appears on your credit report for everyone to see. And if you have too many of these, then that can be seen as a negative thing and that will sort of lower your score. So I've got a couple of points here. The first one I want to suggest you do here is use an eligibility checker. Now, you'll probably see these often directly on, say, a credit card company or a loan company's own website. Like, see if you're eligible for this card, see what kind of rate you might get. Or often, and I prefer doing it like this way, via a comparison site, because then you see a whole range of options. You go via an eligibility checker, and this performs what's called a soft check. So it looks at most of the details. It won't necessarily give you a guarantee that you will get the card, although sometimes you do see sort of pre-approved for this certain amount. But you'll go through that process and only a soft search will be done, and that won't appear on the credit report that is shown to other people. Only you will see that. Okay, so that's a really, really good way to avoid too many applications, because the worst thing you can do is just apply for something, get rejected, apply again, get rejected, keep making these applications to get what you need. That looks potentially like you're desperate. And again, too many of those checks to say that will reduce your score. So limiting the number of hard applications you make will boost your score, or at least keep it level in return. Now, the next one is linked into that, and this is just to space out your applications. It's the same logic that goes with that one. If you make too many applications, even if they're not like a credit card after credit card after credit card, or rejection after rejection, it just could be, applying for a current account and a new mobile account and a new energy bill. Maybe you're moving home. All these things happen in the same sort of space of time. Too many of them has that same impact. So the next tip is to try and space them out. Now, Experian recommends one hard search application every 3 months. Because every time you do one, it lasts for about 12 months. You will see a slight dip on your score when you make an application. That's going to happen anyway, but it won't take too long for that to kind of recover. But obviously, the more of these you have, the bigger the dip that's going to be and the harder it will be for it to recover. It will recover, but it will take time. So this idea of one application every 3 months is probably the safest one. In fact, if you're applying for a mortgage, the general rule is avoid any of these applications at least 6 months before you want to do that. So bear that in mind. However, what I would say, this is from personal experience here, if you've got a good credit score, like I have excellent credit scores across the piece, and I don't have necessarily anything majorly important that I'm applying for, I don't let that worry me. I have applied for 3 different bank accounts in the same month before to get those switching offers, or a month later, a credit card, or change my mobile phone. You can do this. Yes, my credit score has dipped, but it's still regarded as excellent. It still hasn't stopped me getting hold of any of these things that I'm applying for. So this is one sort of very, 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 very important if you're trying to build your score or there's an important application coming along. But if you've already got an excellent score, just have it at the back of your mind and make sure there isn't something like a remortgage or a balance transfer credit card on the horizon that could be impacted by it. Now I've got 3 more to go, and this one is use a credit card. Using a credit card will improve your credit score. Now I know some people are a bit, well, hang on, I do not want to do this. I don't want a credit card. They're nasty, they're evil, they're bad for you. Now that can be the case if you don't manage them responsibly, if you don't use them just for purchases you're going to make anyway, and then making sure that you pay off the complete amount every single month and making sure you have the money available to do that. You know, if you're able to do that and you're confident of doing that, then there's no problem having them. And in fact, there are all sorts of benefits you get from having a credit card. There's Section 75 consumer protection, which is fantastic, or you can earn cash back on purchases or all sorts of other ones. So yes, they can be bad, but they also can be good. But the reason why, even if you're a little bit hesitant about getting one, even if you're not worried about cashback or consumer protection, they are really, really, really useful to build up your credit score, okay? Because to have a credit score, you need to have credit. It's as simple as that. If you don't ever use credit, if you don't ever apply for it or use it, there's nothing there. It's an empty report, and your score is going to be low as a result. Now, any credit card will do for this. You don't have to apply for a special credit card in order to build your credit score. All you need to do with it is make some, following the rules we mentioned above, only spend on there the things that you would normally be buying. In fact, if you're doing this just to build your credit, it only needs to be a small amount. Just supermarket spending, petrol, something like that. Put some small amount of spending on there. Make sure it doesn't go above that credit utilization level. And then make sure you pay it off completely at the end of the month. And over time, this is a bit more of a long one there, long game here, but over time, that will help your score increase. And you can keep doing that. The more confident you are with credit cards, and maybe you do move on to those kind of cashback ones or whatever, the longer you do this, the kind of consistency will be there as well. Now, if you can't get a credit card, a normal credit card, remember those eligibility checks I mentioned just a few points ago. If you can't get one of these, then it might be worth looking specifically for one which is designed to help people rebuild their credit score after maybe something like bankruptcy, or they just have no credit score already and they're trying to sort of start from scratch. Now these ones, you have to be really particularly careful with these because the interest rates are often really, really, really high. So I'll just double down on what I said before. Make sure you clear that balance completely every single month. Really, really vital that you do that. Now I've got 2 more to tell you about here, which might also help you demonstrate, like a credit card can, that you are able to make regular payments, you're confident with credit, and you are a reliable person to be lent to. The next one of these is for renters, okay? Because if you've got a mortgage, your mortgage is already on your credit report here. But if you're a renter, that doesn't automatically go onto your credit report, and therefore it's not reflected in your credit score. But there are a couple of services where you can either ask your landlord to join a scheme and be part of a scheme and they will report for you, or you can do it yourself. Now the first one of these is called the Rental Exchange. This is run by Experian, one of those 3 different credit reference agencies, and they will work with social housing groups or with private landlords and letting agents, although they do have to have more than 500 properties. So if you've got a small one-man band, they're not going to be part of it. But if they've got more than 500 properties, they can join the scheme and you can request for your details to be reported onto both Experian and Equifax, which is fantastic. If you can't and you're on your own, there are 2 schemes, 2 websites you can join, Canopy and Credit Ladder. Both of them are free, but Canopy is free to report to both Experian and Equifax. Credit Ladder will only let you report for free to one of them. And it is important you report to both. So I would absolutely go with Canopy over Credit Ladder at the moment. And the last one to mention will give you that tiny little bit extra on top. This is something called Experian Boost. Again, it is Experian only, this one. And this is something you have to sign up for. But if you do it via something called open banking, you're probably used to this right now with different apps that you give access to your current account. You give Experian access to the data in your current account, and they can then report things like your council tax repayments. Because again, that's not something you make on a regular basis, but it isn't reported to them. Council tax, any savings, regular saving amounts you make every single month, a standing order maybe goes to savings. Streaming service subscriptions like Spotify or Netflix, they can be reported to Experian. They will boost your score. You'll see an instant improvement in your Experian credit score. Now, the jury's still out here on whether the lenders are going to use that data any differently. Maybe over time they will. It's still relatively new. There's no guarantee that by doing this, you're more likely to get a credit card or a mortgage or whatever it might be. But again, it's all stuff you can do just to demonstrate. This is what it's all about. Demonstrating that you understand credit and you are able to borrow money and responsibly sort of like put stuff aside every single month. So there you go, 14 different things, 14 simple things you can do to improve your credit score. I've got a whole article which takes you through all of these as well, which I will link to, so you can click through after this and read that. Plus, don't forget I mentioned a couple of other videos that you might want to watch explaining what credit scores are and what credit reports are. So make sure you watch that one. And also another one which I think you might find interesting. What is a good credit score? My name is Andy Webb. Thank you so much for watching. If this was useful, please do hit that subscribe button, leave me a comment below. Until next time, cheers.